very good Thursday. Yeah, I was thinking it's Thursday. Happy Thursday. It's sunny Thursday today here in the Netherlands. This is another quick trading review show with me and BC Richfield. Today, I want to talk quickly about a Bitcoin trade I executed this Saturday, which actually went against my rules, but nonetheless, I do not regret that. And I will also give you like my outlook of Bitcoin for the coming days, weeks, and BC Richfield has also some surprises for you guys. So I would like to share one of my theses of last week, and this is actually my thesis of last Saturday. And I would like to explain why I longed Bitcoin. Well, it was pretty easy. If you connect the Fibonacci from this point to this point, you will see the 618 Fibonacci level, which pretty much aligns with this wick here and with the 200 EMA. And I will talk about the 200 EMA in a few seconds, why I think the 200 EMA is really important also on the weekly chart. So this is a 4-hour chart. So this was basically my thesis. A bounce from this Fibonacci level and from the 200 EMA was essentially my trigger point. It also has some nice confluence with this zone here, as you can see. So we gave the call and we traded this call. It's still hovering. It just touched one of my TP in the next day. It's kind of hovering a close below the 200 EMA, or if you're more risk, if your risk appetite is higher than my risk appetite, then a close below the 618 Fibonacci level is actually the deep point of invalidation. So talking about the 200 EMA, why I think the 200 EMA is such an important level is this. This is not a coincidence that Bitcoin was rejected here and here. There is a double layer of resistance. We do have a horizontal resistance and a 200 EMA. My conviction is if we reclaim this level, if we reclaim the 200 EMA on the weekly, this will open the port to higher levels, and I am targeting 30K. BC Richfield, I know you had some good trade setups to share.
Yeah, awesome, man. So I'm actually going to run over very quickly a winner and a loser. Okay, so good nice winner from last week, and then the ETH trade that we got stopped out on yesterday. Just to, I think it's really important to show people, as we've always discussed, the transparency of this, right? Obviously, there's that tendency to want to just share winners, and especially Twitter and stuff like that, but it's not what trading's about. And actually, how you deal with your losers will probably be a real big make and break factor of your trading moving forward. Just a big shout out to Birb, C-Ron as well, who are on the trade today, and everybody else. Really good to see you on there. So the first one I'm going to run through with you, and I know you all know this is against how I normally work. I'll try and do this really, really quickly, all right? But this was the trade setup, okay? This was from the 24th. We're playing risk. We're playing weakness in risk and strength in the DXY, okay? ETH losing key medium time frame levels, also showing weakness. And then we reduced the position size on here due to the choppy conditions and also heading into the weekend. A little similar to yourself, Jimmy. I'm not a huge exponent of trading at the weekend. So let's just pop on my replay mode here and let's just take a look at this one. Here on the, when did I say? The 24th. Here we go. So one of the key factors for me when I'm looking at this on a higher time frame, right, is that when I'm saying that we're seeing weakness here, we can see that we're in an overall downtrend, especially on the 4-hour, we're in a bearish structure. These are key high time frame levels for me. And when we've come up into these to retest them and lost them again, for me, that's showing weakness, okay? So once I've got those parameters in place, then what I'm looking to do is to execute, okay? So for me, I like trading in and around key sessions. We've got the London session here. This is representative of the New York Open, which is historically when you have the highest volume in any trading session. So for me, as a day trader, it's good to have that as well. Hey, Ken, just jumped in there as well. Good to see you, buddy. So for those of you that know how I trade, I've got to try and keep it very, very simple for my entry mechanisms. What I'm looking for the point that we're showing weakness. I want to see a drive above a high. This is if I'm looking to short. And the reason for this, in my opinion, is what we're doing to kind of trick the market. This is the generation of liquidity, all right? Then we need a key break of structure, yeah, or a shift in market structure. So we've got our higher high, our low, lower high, this break down below here. And I need to see displacement, an energetic move through this, because I want to be shown that the sellers are really ready to step in. Then what I'm doing is I'm using a breaker for an entry, and I'm just looking for the last down candle telling me where the sellers were that preceded this manipulation higher or this pump higher that took out these stops to generate liquidity. When we then get that impulse move and that breakdown, I'm looking for price to retest this area. Why? Because if this was the move higher, then this is the mitigation of those orders to bring it back to equilibrium. It's a good entry point. I can get a tight stop loss. And although you may get stopped out doing these type of trades, normally when you get a re-entry, you get another bite of the cherry. But as it happened in this one, we got a really, really lovely trade that blew through our targets and really went down to a nice key level. So that was the winning trade. So that all went according to plan. Now, what you'll notice with this next trade is that there's nothing different in the methodology behind it, right? But what was different was that it was going a little bit counter my system, right? Now, I explain this here in the trade explanation. Playing range high reversal and weakness in equity is clear invalidation above if wrong and potentially big risk to reward if correct. So worth the small risk, in my opinion. Half-size position due to the fact that we're countering the higher time frame trend. Now, my expectation, due to the fact that we were interacting with the key level and showing a bit of weakness, was that we were going to get this corrective move that we're in now. But the truth of it is that I called it a bit early, and then due to other commitments, I didn't get the opportunity to go in at the second bite of the cherry. But you know what? Stuck to the plan, stuck to the system, and I was honest with myself in terms of this. So I really want to take a look at this with you guys so that hopefully it kind of sheds some light, certainly on my thinking with entering these trades, and also what I would do at a secondary point as well, okay? So let's just ignore these ones here for a moment, because that wasn't to do with those. Okay, so actually, where are we here? Where is this trade? Hang on. It's embarrassing now, I can't find it. So for some reason, I must have hidden that setup when I was doing my review earlier. So let me just find exactly what time it was that it triggered.
Yes. No worries. We got you. So, I think that also the key main lesson here is you can have a strategy. It can be you can back test, forward test your strategy. All is fine, but don't expect, never expect that your strategy always plays out as you desire. There are always invalidations, always. So a good trader knows how to absorb that invalidation. I just tweeted yesterday a really simple tweet. I'm here for this is a reminder. I'm here for the money. You can keep being right. I am not looking to be right in this market, because trying to be right all the time is practically impossible. So the ego wants to be fed, of course. I'm not the type of guy that tells you, okay, always try to fight the ego and kill the ego. The ego cannot be killed. The ego is just there. It's a part of you. It's a part of our self-image. It helps to make sense of the world. It's trying to protect you. But if you want to feed your ego through trading, don't let the P&L feed your ego. The ability to stick to your system and respect the system, even though you got stopped out, that's actually the way how to feed your ego on a consistent basis.
I think that's a really, really good point there, Jimmy. A really, really good point. And the truth of it is, I think a lot of people, humans, we're very well set up to kid ourselves for things when we're looking at them, right? To see patterns that we want to see at times we want to see them, which is why it's so important that we do these types of trades under trade conditions, right? So now with my setup, what I'm looking for is quite clear. As I described before, I want to see a sweep of a higher. It can be something like this, and then you get that impulse move lower, all right? But then what I'm looking for here is a momentum shift to the downside, right? So what we can see, what we've got here, is we look at this sweep higher, and we then get that punch below. Now, like I said, what we're looking for in this example is we want the down candle, right, that leads to that move up. Now, as we come back to retest it here, what we can see is it was a little bit early, right? And this is always a risk with a low time frame system, is making sure that you're on the right side of this trade. Now, for me personally, with my system, I know that if I get triggered out on one of these type of trades, that I'm almost certainly going to get another bite of the cherry the next time. Unfortunately, obviously, being human, it doesn't mean we're always around for them. And unfortunately for me yesterday, that was very much the case. So by the time we came in and triggered here, and we got this nice move down, stop loss obviously above this high, what we found was we got the move down, we got the trigger, we got the entry, price started to move away. One other thing that I must admit that I didn't do particularly well this day was take into account the PCE, so the news, right? Now, I think you need to be very careful in what news that you're paying attention to. You don't let it skew your bias or over control you, but you do always want to be aware of it, all right? So what we've got here, we can see the trade triggered. We started to come back down, and then we had this big impulse move higher. Now, what we can see here from this move higher is that actually what it's done is it's cleared out all the stops above here, right, before reverting to type, and then we get the sell-off. But what if I was available when I'm reviewing this last night, we would have got the opportunity for is with using the exact same setup. So here we have our sweep of the higher. Here's the down candle that leads to the sweep. This creates our breaker. Here's the impulse move away. Our retest, stops above the high, clean target below, all right? Now, you need to get yourself in the right psychological space that if you're going to take these hits early, that you retain your high time frame bias, and then you give yourself the opportunity to move back in for more opportunities, all right? Perfect. Not quite the 2 minutes, maybe more like 10, but I'll try and get better as the weeks progress.
You did your best. So, ladies and gentlemen, that was the quickly review, but also a quick outlook. Next week, there will be another show. If you guys have any questions, please do let me know. You can always tag me on Twitter. You have something to share, a chart, whatsoever. Always welcome to tag me or DM me on Discord. If you're really interested to try out the Birb Nest, you can try out our free trial. It's really free, 100%. We don't need credit card details, nothing, just a email address, and you can try us out for free, 7 days. Or you can get the calls only package, which is worth $100 for free if you sign up through our Birb Nest Bybit URL. Guys, ladies, gentlemen, BC Richfield, I wish you a beautiful day and talk soon.
You too, guys. See you soon. Take care.
Ciao.